Yeah, good morning, everyone. So again, we saw US market moving up yesterday. We are seeing consistently market moving up in US in last few days. Mainly the point yesterday move was mainly driven by uh, the GDP figure, which came ahead of expectation. Now the scenario is like that: the inflation is coming off, and the economic slowdown is not so great. So the slowdown is marginal, and the inflation is coming off. So the cycle of the interest rate tightening is likely to get off in one or two meeting, and thereafter, even with these high interest rates, and also the inflation coming off, economy continue to remain uh, positive. So that is creating some type of positiveness in the US market, and which is taking the market up. The key concern here is that we had seen some commodity prices again moving up, specifically in metal side, wherein because of opening up of China, the metal prices has moved up, and also some of the agri commodity like rice has seen internationally prices moving up. So that is a caveat which may prop up inflation again, and which can keep the Fed in a tightening mode for some time. So in all, US market remain strong, and futures are marginally negative. Asian markets are on most. China is still close, and Taiwan also close, whereas the other market are seeing some positive trend. Uh, Oil is also continue to remain firm, and is up by around $1 since last 2 days back, same time. So overall scenario in the world market seems positive, but we had underperformed consistently even after the world outperforming. Mainly, we feel could be because of some slowdown what we are seeing because of in the Indian economy, and also we are expecting interest rates. We are expecting budget, and in expectation of budgets, the market is remaining sideways. One more concern which is emerging in the Indian market is the short-term interest rate, which is consistently moving up. The CD rate for 3 months is now at around 7.38, which is one of the highest in last 3.5, 4 years. So that is creating some concerns for even the banks also, which buy money for short term, that is for 3 months in the CD market, which is making the money costlier. And going forward with the budget expectation that the market, the FM will keep the fiscal deficit high, these interest rates are remaining continuously high, and which are putting some pressures uh, on the equity market as well. So now request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. This is Swati. Today, the market is likely to open on a positive note, or say the gap of opening at around 18,940-93 levels. I believe that today we are likely to witness some sort of a pullback rally, because on Wednesday we have seen almost 1.5% cut on the Nifty and 2.5% cut on the Bank Nifty on the closing basis. So today we are likely to witness short pullback rally, which might take the Nifty towards 17,970 to 18,000. So 18,000 will act as a crucial resistance level on the Nifty trend. If it manages to maintain a closing above 18,000 psychological mark, then only we can witness the continuation of this pullback rally towards 18,100 to 200 levels. On the downside, as of now, the immediate support is placed at 17,800. Any move below that level will again trigger the selling pressure or say the profit booking, which might take a Nifty towards 17,700, and below that level, 500 levels will get to. So the view will remain a cautious. It's just a small pullback rally we are likely to witness in the today's trading session. Uh, a major trend reversal can be seen only above 18,200 level. So as long as Nifty sustains below 18,200 level, the trend will remain a bearish also. Coming towards the Bank Nifty, last means on Wednesday we have seen a sharp cut of almost 2.5% on the closing basis, which gives some sort of a cautious trend on the daily charts. Now coming towards for in today intraday purpose, the immediate resistance is placed at 42,200 level. If it's clear that level on the closing basis, then only 42,500, 42,700 levels can be seen on the higher side. Whereas on the downside, the immediate support is placed at 41,300 levels. Below that level, 41,000 levels can be tested. Coming towards the Nifty Finance, 18,020, 18,270 are the resistance level we need to keep eye on it. On the flip side, 17,640 and 17,500 are the two threshold supports. So the overall view on the three indices will remain a cautious to bearish itself as long as it trades below the mentioned resistance level. Now, stock specific on the technical front, VIP industry really doing very good. Uh, Last week also, sorry, Wednesday we have initiated a buy call in this particular stock and it has shown a very good amount of the rally on the higher side even though the market was correcting. I guess the result has also come the positive on the positive front, and so this pullback, this positive trend is likely to be continued towards 750 to 770 levels on the higher side. So one can take a long position in the VIP industry at the current level as well. Stop loss can be kept at 695. We are looking for a target of 750. That's it from my end. I request derivative team to take a call for.
Yeah, thank you. Good morning, everyone. So on the derivatives data front, as you witness that major sell-off been witnessed on the Wednesday trading session, while against that, if you look at the overall wise structure, heavy call writer positions got added up at the 18,000 strike, around 5 million positions of call writer got added at 18,000 strike. So going above 18,000 trading session is very much important for the strong pullback in the market. But if you look at the overall structure from 17,900 to 18,200 strike, call writer positions are continuously getting added up on daily basis, while on the monthly basis we are seeing that the highest put writer position is at 18,000 striker. So 18,000 will act as the tug of war situation right now in the market. Closing below on the weekly basis, if it comes below 18,000 levels, then again the cautious momentum is intact in the market. So in today's trading session, for the positivity in the next week trading session, 18,000 level is very much important. Closing about that. Well, if you look at the PCRY, PCR yesterday closed at 0.67 level on the week expiry basis. So today's opening for the PCR would be almost around 0.85 to 0.90 levels. So once if the PCR get stable about 0.85 level in today's trading session, then we might expect the market to again get settled around the range of 17,800 to 18,000 strike. Continuously from past 1 month, we are seeing that Nifty is holding the support of 17,800 level. If the 17,800 level gets broken, then as per the OI portions, the next support for the market would be 17,500 level. The fresh buying will be witnessed in the markets only about 18,200 level, where second highest correlated positions are getting added up. So 18,200 to 300 will act as an important resistance zone for the market. Currently, the positive thing we have seen in the market in Wednesday trading session is index option. In index option, we are seeing that 23,000 crore of positions got added up. So this is a hedging positions got added up in the market. So between 17,800 to 18,000 strikes, heavy hedge positions is being set up in the market. So currently we will hold the long positions and we will not create new short position till the Nifty is holding 17,800 strike. Once if Nifty breaks 17,800 strike, then we should exit from the long positions and settle for the short positions to be created in the market. While as per the stock specific, only one stock which is looking positive currently as per the OI positions is ITC. ITC is continuously from past 3 days. We are seeing that from 330 to 350 strike, the OI positions are getting added up on the upper end. So we expect ITC has created a base on the downside between 330 335 levels, and we expect the buying to be seen towards 345 to 350 levels. So new positions can be initiated in ITC. So that's it from the derivative front. Thank you.
Good morning. Kirloskar Pneumatic result was above expectation. Revenue grew 6% sequentially and 37% YOY. OPEX declined sequentially, resulting in EBITDA growth of 26% even on Q-on-Q basis. EBITDA margin also improved to 16% from 13.5% in September quarter and last year's 9.7%. As a result, profit came at 33 crores against expectation of 27 crores. And sequentially it was 27 crores and year on year just 12 crores. So we remain positive on Kirloskar Pneumatic. Dixon Technologies result is below expectation. Revenue declined 22% year on year. Decline was led by the TV and lighting segments mainly, both of which declined by 38%. As last year Diwali was 1 month earlier. And also the realization in TV declined by 20% because of significant correction in open cell prices. And also if we see the sequential revenue in mobile segment, which was at around 1600 crores, that also came down to just 900 crores in December quarter. So all these things impacted the top line. Because of this, management has also cut its revenue guidance for FY23 from 15,000 earlier to now just 12,700 crore range. EBITDA came at 111 crores, much lower against expectation of 132 crore. Similarly, PAT was also much below expectation. Because of this revenue guidance downgrade by the management, the stock has now become more costlier than earlier. Before the result, it was at just 40 times FY24. Now, post the downgrades, it is now at 48 times FY24. So even valuations are expensive. So there is some downside from these levels. We think near to medium term story is done with in Dixon. So one can maybe if anybody is holding, one can maybe switch to a better stock. Thank you.
Yeah, good morning. Jindal saw reported its numbers, improved set of numbers. Revenue came in at 5,158 crores, up by 28% sequentially and 49% year on year. EBITDA came in at 495 crores versus 331 crores sequentially. Margins have also improved to 9.6% versus 8.2% sequentially. The stock is trading at EV by a bit of 6.2 times on trailing basis. Tata Steel long product result was okay. Revenue came in at 1790 crores versus 1914 crores sequentially. EBITDA came in at 67.4 crores versus negative 75 crores sequentially. The stock is trading at EV by a bit of 60 times on Q3 FY23 annualized EBITDA. Thank you.
Good morning. Bajaj Auto announced its result. The result was ahead of expectation. Revenue came in at 9,315 crores against an expectation of 8,998 crores, which grew by 3% on a YOY basis, primarily led by higher realization at around rupees 94,700. The company has gained 2% market share in the 125cc plus segment. Finally, it also seems to have sharpened its focus on EVs with network expansion and enhancement of the product range from entry-level models to premium models. The management highlighted that the chip situation has now stabilized to normal levels. The company has further worked out a strategy to secure additional supplies through alternate vendors. Going forward, improving chip supply will continue to enhance product mix, leading to margin expansion in the future. EBITDA margin came in at 19.1% versus an expectation of 17.3%, led by higher than expected benefits from commodity prices and an improved mix. The company witnessed strong double-digit growth in the domestic business, which helped to offset the weak performance in the export markets. The stock is trading at a PE of 16.6 times FY24 EPS. CEAT announced its result is in line with expectation. Revenue came in at 2,727 crores against an expectation of 2,878 crores, which grew by 6% sequentially, but grew by 13% on a YY basis. EBITDA margin came in at 8.7% versus an expectation of 8.4%, which was better than expected, led by gross margin expansion of around 220 basis points sequentially. The gross margin expansion was driven by the RM basket declining by around 4% sequentially, along with a marginal price hike of 0.5%. Decline in the RM basket was led by drop in both the natural rubber as well as crude derivatives. The management indicated that the RM basket is expected to see further softening in the fourth quarter by 3 or 4%. Volumes for the quarter grew in low single digit YOY, while the same declined by 6.5% sequentially. The company reported a weak quarter versus last quarter, particularly in PV across OEM and replacement segments. Export market continued to be affected by macroeconomic challenges and inflationary trends. With order book improving and forex stabilizing, the management remains hopeful for a better export performance in the near term. The stock is trading at a PE of 15.3 times FY24 EPS. Tata Motors announced its results. The result was ahead of expectation. Revenue came in at around 88,489 crores on a consolidated basis versus an expectation of 83,699 crores, which grew by 11% sequentially and 23% on a YOY basis. EBITDA margin came higher at 10.9% versus an expectation of 10.1%. JLR is continuing to focus on signing long-term partnership agreements with chip suppliers, which is seeing improving visibility of future chip supply. It has a strong order book with 74% of new orders for the Range Rover Sport and Defender. In the CV business, sale in the quarter was around 97,700 units. Market share was at 42.1%, which they grew by 260 bips YOY, but improving month on month. The commercial vehicle industry witnessed a robust recovery in the third quarter, led by strong demand in MHCV and passenger carrier segment. Improving fleet utilizations, pickup in road construction projects, and increase in cement consumption catalyzed the demand recovery for MHCVs. Wholesales grew by 33% on a YOY basis to around 132,000 vehicles, driven by strong demand for Nexon EV, Punch, Tiago, and Tigor CNG. Retails grew by 27% on a YOY basis. The business witnessed highest ever retail sales at 1,39,000. Demand continues to remain strong, however, will remain a key monitorable in the wake of global uncertainties. Improving chip supply and cooling commodity prices will aid revenue and margins recovery. On the EV side, the company is growing with new model launches, network expansion, and investment in charging infra. The stock is trading at a PE of 14.1 times FY24 EPS. Thank you.
Sir, you are on mute. Yeah.
Sorry. So DLF has come up with the numbers, and the numbers were strong. Mainly on the booking side, booking has come at 2,500 crore versus last quarter 2000, and also last year also around 2000 crores. So one of the highest growth in the bookings is being shown by the DLF, and that too mainly on account of new launches which company has come up. Apart from that, revenue, EBITDA, and profitability were more of in line. So outlook, though the interest rate scenario continue to remain strong or tight, which is impacting the real estate company, but overall direction-wise, DLF looks comparatively positive in the real estate space. Then Bikaji Food came up with the numbers, and the result has shown improvement. Even the revenue has grown by around 16% year on year. Gross margin has also shown improvement even on the quarter on quarter basis also. Q2 is generally a very strong quarter for the company, but Q3 is lower than Q2. But even in that respect, company has shown a strong improvement in gross margin of around 250 bips quarter on quarter. So, and year on year, there was a substantial improvement in gross margin. So overall, the result has shown a positive trend. Stock seems comparatively a bit costlier as compared to the other players. Then Vardhaman Textile came up with the numbers, and the numbers were quite disappointing. The revenue declined by around 9%, but EBITDA came off very sharply, and EBITDA margin came to just 7.5%. Versus last quarter 14.5 and last year 23.8%. Generally, their margins are at around 18 to 20%, but because of the high cotton inventory which they were carrying and low demand, the Vardhaman has seen these poor results. So this seems maybe bottom of the result, but this will have some impact on pricing in the near term. Then Amra Raja Battery came up with the numbers, and the numbers were strong. They had shown good improvement. Even the last quarter also was a very strong. Year-on-year growth was around 11% in revenue, but the lead price, which has declined, has led to improvement in the EBITDA margin. And EBITDA margin came in at around 15% versus expectation of 13.5%, and last quarter also 13.3%. So mainly on account of the lead price corrections, the company has seen good improvement in EBITDA margin. But thereafter, now the lead prices are showing some up move, and which will have some negative impact on the EBITDA margin in the coming quarter. So outlook is more of a neutral. Then Cipla came up with the number, and the numbers were below expectations. Revenue came lower than expectation at around 5,800 crore, whereas expectation was 6,200 crore. And even the EBITDA margin also was more of a in line with what was expected. So miss on the revenue side, and that has even had an impact on the PAT level as well. Dr. Reddy came up with a good number. Numbers were strong. The company had seen almost around 27% year-on-year growth in the sales, and the sales came at 6,800 crore versus expectation of 6,000 crore, mainly driven by a few of their drugs in the US and also good sales in Russia. Even EBITDA margins had shown improvement. The EBITDA margin came in at around 28.6% versus expectation of 25%. So overall result was quite strong. The share is trading somewhere at around 17 time FY24 earnings. So valuations also looks reasonable. Then Torrent Pharma came up with the number, and numbers were broadly in line with expectations. So now request commodity team, no one is there. So I think no one is there from the commodity team side. So that's all from us. Thank you very much and have a good day.